Nicole.
Your call has been forwarded to voicemail. The person you're trying to reach is not available. At the tone, please record your message. When you have finished recording, you may hang up.
Good evening, Miss Nicole. This is James from Dividend Stock Talk. Looks like we're playing phone tag again. Well, tag, you are it. Chat with you another day. I am awesome as usual. Thank you for saying hi. And if there's anything I can help you out with, just let me know. All right, this doesn't need to be here. Put that over there. This doesn't need to be there. Doesn't need to be there. Okay, so let's do this. Come on. I'm in bed, sorry. Sorry. Alrighty. That thing's still loading? Holy cow. Still loading. Gonna take a while. Good evening. That's off. Phone's dead. That one's dead. Charging. That one's dead. Charging. There. That one's there. Let's do this one. Let's do this one. Not now. Let's go live. Let's do this. Still waiting for that thing to load up. Imagine that. That's going to be a while, isn't it? That's live. That's live. Are we in here? And we do that right there. Live there. D-Barn. What's happening? D-Barn. Fab. What's going on? Silver, gold, Raven. Pour on paper. Oh, I love that one. That's a good name. Pour on paper. I suppose it depends which paper you're looking at. Tate, JK, Raph. What's going on? Wow, we're waiting for this thing to load. We can't do anything until that loads up. Until that loads up, we're looking at. But we can take questions. J Nice, what's going on? Double Francisco, Nunez, ¿Qué pasa, amigo? Reedster, Bachima, Balchima. Okay. Burr College. K-Van, what's going on? Martin, Lanefield, good evening. Nate the King. Johnny Stash. Shane's here. Jake, Pete, Francisco, Truth Seeker, Lena, R, Ticole, Marcus, Bergens, Cosmic, Emptiness, Oils, okay, Yardot. Cebu, what's going on? Connie Ann, what's going on? Doug, what's happening? Salon. Oh, wait a minute. Sesson? I can't read that. MRK, the dog, and mowed the lawn today. That's funny. We'll take a look at that one in a little bit. Let's say I have zero. Uh-oh, what's going on? What's question over here? Do we have... Greetings from Ohio. Mark, what's going on? What is this? Paul from Colorado. Let's say I have zero stars. What is the best way to get into options? Buy first by the stocks, then decide covered puts a call. Ooh, fab. That's going to be a tough one for me. Only because I like things simple, safe, and easy. The strategy I use that I use only because I really don't want to sit in front of my computer all day and follow things. If I find a company that I like, I will buy it, hold on to it, sell covered week after week, and just keep collecting the premiums. It's always one stock after another. If I like the company, well, great. Let's buy it. Why isn't this thing loading? It's going to be a while before we do anything. See what's saying that one so long. J. Dion, what is the longest time you've sold calls on a stock, waiting for it to get back, strike? The longest? I would have to say, I could have a phone call. Who the hell is calling me? Good evening, and how are you today?
I'm good, how are you?
I am delightful. I'm live right now, so you're being, you're on live with me, so say hi to everyone.
Hello.
I'm sure nobody's paying attention, but not the point. Two things. Number one. How can I help you out?
This is Kristen, and I just had a question. Hello. I just had a question about using your strategy in IRA accounts.
Okay.
So I wanted to find out the strategy we used in IRA account, and how I know that you said that your process is pretty safe, which is fantastic. Have you ever used it in an IRA account? What do you think?
Well, IRA accounts are basically governed by the government because they want to make sure you're not too much money, and you're not doing anything illegal while you're in there. But a covered call is perfectly acceptable in an IRA account.
Okay, perfect. Well, I have a 401k that I need to roll over, so I wanted to find out if the strategy would be beneficial for that. I would actually like to make more than what I'm making currently in my 401k.
No, I'm not quite sure. Now, does your employer match your deposits in your 401?
They did, but I am no longer with that employer, so it just sitting there, no money is being added, so I want to roll it over to an IRA, so I would start adding additional funds to it.
That's an interesting idea. You might want to talk to someone, but there is the possibility of taking the funds out of the 401k and switching them over to whatever trading platform you're using, and either a Roth IRA or another regular IRA, and that way you can self-direct it. You would be in charge of it. Because right now, nobody's in charge of your 401k.
Right, exactly. That's why I was thinking that this might be a good plan for that account, because then I would have control over it, and still be able to add money to it.
Okay, so here's another thought. Against it, giving someone the rights to buy it from you for the same price you just paid for it. Sounds crazy. Why would I buy something? Turn around, sell it for $100? Because I want to collect that little insurance premium. More than 1%.
I love your concept. It's so interesting to me. And I've watched a couple of your lives, and I find the process just I'm so intrigued by it. I'm like, this is fantastic. It's so smart. But I just wanted to ask about the question. He thought that.
Okay, now I'm going to let you know. I'm not a professional. Anything. I'm officially retired. I have no accolades to my name whatsoever. I'm just hey, that's what I would do. That's what your best bet is, to call and talk to someone a lot more smarter than I am. That's actually okay with what it is you want to try to do.
Right. Well, and I mean, I can definitely do that. I also think that sometimes people have just found better ways than the institution.
Oh, they say that. The road of hard knocks is sometimes wiser than actually going to college.
Yeah. Yep.
The road less traveled.
Yeah, 100%. So, that's kind of what my plan is. So I will be joining here shortly. I have done a few live trades with options. So I've been studying up. I'm familiar with the terms, but I'm definitely not a. I'm very new, but I'm very excited to learn.
I hear you. I'm excited for you too. Yeah, it's always wonderful for you to take control of your own money. Stop relying on other people to do it for you, because nobody has.
Well, thank you so much for taking the time to call me. I appreciate it. And I'll be jumping on your live here soon, whenever you're live soon.
Hello. You need to order to feel comfortable moving to the next phase.
Okay, I will do that. Thank you so much, James.
You're welcome.
I appreciate it so
Have
much.
a great day. We'll chat with you another day.
All right, sounds good.
We'll chat with you another day.
Good.
Bye.
Thank you.
Wow. No, I got an old computer. I'm ready to upgrade to a new computer. And challenging. Because I was going to drop off the old computer and the new computer geek squad and have them transfer from one computer over to the other. I said, yeah, I'll tell you about 7 days. I said, oh, hell no, that ain't going to work for me. Because it ain't going to work for me. If you can't do it over the weekend, I mean, I could drop it off on Friday afternoon and pick it up Sunday afternoon. It gives you 48 hours to play with it. If you can't do it then no. Okay, so K-Van wants to take a look at MRK. Well, let's pull it up and see what's going on. MRK. Here it is. I'm not even opening up October. That's this week. We got 2 days left. Ain't nothing going to happen with 2 days. That's just not enough time, in my humble opinion. What the hell do I know? That being said, first and foremost, my name is James. This is Dividend Stock, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. No sound. Uh-oh. No sound or video. You're on YouTube. Why isn't there any sound on YouTube? Well, the microphone's working. Okay. This is a cheap live stream. Hey, thanks, Phil. No sound or video. Well, now that's weird. You know what? I'm going to close it out, start it over again, and hopefully. Second time around, be better. So I usually don't have a problem with YouTube. That's YouTube number one. All right, so let's try it one more time. There we go. Next. It's not made for children. Turn the volume all the way up. Live and hypothetically speaking, that should be it. Hopefully that works. That being said, let's keep on going. Mark is the first one. We're looking at evening. MRK. If you like Mark. Now, if you don't know, my name is James. Like I said, I created this trading strategy for my 9-year-old daughter back in 2008. Okay, one day she just came to me and said, "Daddy, what are you doing? Can you teach me?" So a 9-year-old is asking, "Can you teach me to invest in stocks in the stock market?" Well, most adults don't get it, understand it. So how am I supposed to teach a 9-year-old how to do this? All right. That being said, let's get rolling. Number one, it had to be simple, safe, predictable, consistent, and no way for her to lose. Now that was from my 9-year-old daughter. Now I had five rules that went along with it. Rule number one: never buy something that's not on your list. Now, what do I mean by not on your list? Well, we check every single week. This week there's 10,470 different companies to choose from. That's a lot. So the only companies that I like are companies that have been in business and consistently profitable for at least 2 decades. That's 20 years. Now you might want to cut it back to 15 years, whatever you're comfortable with. But it's a comfort level that you have to be okay with. See, now I'm okay with 20 years. Because it takes a long time for a company to get from 1 or 2 years to 10 years, and then up to 20 years. Then after about 10 or 15, you should be pretty much profitable and consistently profitable. But at 20 years, you should really have your shit together, so to speak, and be profitable. Joey Kent. Joey, a favor. Is there volume there? Because a couple seconds ago, someone said there was no volume on YouTube. Can you hear the words? Can you remember Chris Tucker? Can you understand the words coming out of my mouth? Sounds great. Joey Kent sounds great. Alrighty, that works for me. Alrighty. Now, anytime, always, I was going over the rules. What's number one? Never buy something that's not on the list. Now, when I say list, you have to choose what companies you like. Now, when you're looking through those 10,470 different companies, decide which ones you like and which ones you don't like. You can break them down by volume, how many shares they have traded on a regular basis. The more, the better. Okay, so think of it this way. If you pick a stock, Vivi Plays. I hope you have a wonderful day. Yes, thank you very much. Think of it this way. If you're buying and selling stock, you want to have what is called liquidity to get in, to get out. Because you want to have a good sell price, Well, you can only do that with companies that have a lot of volume. Okay, take a look at this is Merck. 33 million shares traded today. Well, that's a good number to share. Up to trade. Okay. Now they have companies. That have just a few thousand shares traded. Well, that's like being the only person on the dance floor. It's not a whole heck of a lot of fun. Issa Bice. Hello. How are you? Good stream so far. I just got here, man. You just got here. Find good stocks. Now you can break it down by price. Because I'm not sure about you. I can't do stocks that are over $1,000 a share. There are a few of them. I like to stay under 300 and above 5. So $5 to 300 is my range for me. And then for shares traded on a daily basis, I like to look at 300,000 or more. Okay. Then you can look at do they have options? Are they profitable? What's the book value? What are their earnings? Are they consistently increasing their earnings? A lot of interesting things go by. So one pick set of stocks. So for me, it's Dividend Kings. Those are companies that are consistently profitable for at least 5 decades. That's 50 years of consistently increasing their profits year after year. Well, that just makes sense to me. It's like okay. Rule two. Never sell at a loss. Wait a second. Hold on. Dividend Kings. Sorry. Let's go back to the list. Dividend Kings. Dividend Aristocrats. 25 years of increased profits. Dividend Champions. 25 years of increased profits, but the rules are a little different than the Aristocrats. So the Aristocrats and the Champions both have 25 years of profits, but the rules are different. List number 4. Dividend contenders. These are companies that have been profitable for 10 years. to 24 years. Didn't quite make that 25-year mark, but you know, still 10 to 24 years. Great. Pick a company that you like. And lastly, list number five, we're going to look at Warren Buffett's list. Okay, I don't know about you, it's good enough for Warren Buffett. It's good enough. Fine. Dean, it is your five list. That's about 300 different companies. So number one, never buy anything that's not on your list. If you don't like it, don't even bother looking. It's just no reason. Why would you look at something that you're not going to buy? It just makes no sense. Right. Rule number two: never sell at a loss. Sprout, thank you for that. Mango. Hey, been a minute since I've seen you here. Did you get in on the gold mining stocks? Absolutely no. Okay. Gold mining stocks. Unless it has 20 years, two decades of consistent profitability, I have no desire to look at them. Sorry. Rule two: never sell at a loss. Defeats the purpose. I mean, we're here to make money. Why am I going to buy something for $100? 6 months later, sell it for 80, 87, 50. I have no desire to sell for less than I paid for it. So when I buy something, I go with the intention of holding it. Even if it goes down, but holding it until it hits my target. So look at Merck right here. Merck's at $90. If I buy it tomorrow morning at $90, it can drop down to 10, 15, 30, 50, 60. They can drop down to whatever. But if I buy something, I'm going to stick to rule 1 and rule 2. Never buy something I don't want to hold on to long term. Because if they have a dividend increases every single year, well, odds and probabilities are that the stock is going to come back up to where it should be. Because the company is consistently profitable. I mean, that just makes sense to me. Rule number three. Make sure the company is consistently profitable. We just talked about that. Rule four. Weekly options only. Okay. Rick wants to take a look at UPS. Hold tight, Mr. Rick. All right. Mr. Rick wants to take a look at UPS. We'll look at that in a second. Rule 4, weekly options only. I want to get weekly cash flow. That's it. Okay? I don't want to do monthly because I can only do that once a month. Okay? If it doesn't have a dividend, that means I have to go in and read all those damn quarterly reports and annual reports. And then I have to study the charts year after year to find out when does it move predictably on a consistent basis. Because dividend stocks. Let me pull this up for you. Because what I tell people, what I do is one thing. What you do, that's something totally different. Rule one. Pick out a good set of stocks. Okay, so let's take a look at some stocks that are consistently profitable for at least 25 consecutive years. Right there. Here we go. See, all these companies have been consistently profitable for 25 years. And they have a dividend in the month of October. Okay, today's the first. So APD, CAH, FRT, and O all have their dividends today. Or the ex-dividend today. So if you want to collect the dividend for this, you have to buy it before today, which was yesterday, the day before, last week, whatever, to collect the dividend. Now, I don't want to collect the dividend because these little green dots is the last day the stock trades before the dividend is paid. After the dividend is paid, the stock goes down. Before the dividend is paid, the stock goes up. So the stock goes up into this date, and then after this date, the stock goes down. So I want to jump in before the dividend is paid, and then jump out before the dividend is paid. Either way, I'm still looking for that 1% every week. All right, give me a second. Ooh, that's much better. All right, let's get back to All right. So we're looking at Merck. When I look at a chart, I'm looking for five things, and only five things. And it takes me 3 to 4 seconds to find. It's kind of like finding where's Waldo? Where's Waldo? Or where in the world is Carmen San Diego? Where in the world is Carmen San Diego? Oh, where's Waldo? Same thing. Five things. Right? Number one, the high of the year. Number two, the low of the year. Those are pretty self. I mean, you can take one look at it. Oh, there's the high, there's the low. And then the other. You ready? Where was it a year ago? That's pretty easy. Where is it now? Today, right here. And what is the movement since the beginning of the year ago to today? So we just take our pen down, up, down. It's that easy. And it should take you 3 to 4 seconds to see that. Let's try something for a second. There it is, right there. I have an idea. I have an idea. Watch this. You'll like this. You're gonna like this. All right. We're gonna pick right there in plat. All right. Now, one thing. Before I go on any further, just in case you didn't know. This screen behind me is live on YouTube. So you go over to YouTube on my YouTube channel, which is 10-Minute Trader. All the videos you've seen me. Hey, this is Dividend Stock brought to you by the 10-Minute Trader. So two channels here. One is Dividend Stock, which a lot of you are on Dividend Stock, and the other one is the 10-Minute Trader. Okay, the 10-Minute Trader was first about 20 years ago. Now Dividend Stock Talk. So what am I doing here? This here is Think or Swim. Okay. Now Think or Swim is a trading platform that I like. Now, I've been using it for over 20 years. That's awesome. Haven't changed it. I'm one of those creatures of habit. You know, I like things to be the same. I turn my computer on, and I want everything to be where I left it. I hate it. When I open up my computer, the first thing it says, congratulations, you have been updated to the trading platform. No, I didn't want it. I like if I had my way, I'd still be using Windows 95. I like Windows 95. It was seamless. Everything worked fine. And all this new crap I do not use. I still use the same crap I used back in 1995. Anyway, don't get me started. All right, so what we're looking at is a list of stocks, the chart, and the numbers. Okay. This is one of the reasons I like this. Now, I can take this one little finger and hit the up button or the down button on the keyboard. And it's going to go one stock at a time. And as it goes down one stock at a time, it's going to bring a chart. I'll be a high, the low. Is it this thing? Look at this. This is going up right here. Okay. Well, that looks great. But what doesn't look great? This right here. These are months. That should be on my list. That's Leggett and Platt. That's a Dividend King. All right, so I hit the back, boom, and that's simple. That was easy. Okay, so Flick has no options. Let's get rid of that. Walgreens. Nice. We can do this right here. All right. Walgreens. Right there. High, low. Where is it? Down. Whoa, what's going on here? All right, now it's interesting. $12. 12 over here. MDU. That shouldn't be there. Ben, that shouldn't be there. That shouldn't. What the hell list am I even on? Let's find a different list. Oh, that's just quotes. I don't want that one. I want this one right there. There we go. Why isn't that working? Here it is, right there. All right, K-View. All right, interesting. All right, let's do it this way. Let's do it this way. Right, these are all the companies that are at least 25 years of profits. Sit right there. And as I go down one at a time. Okay, just hit the down arrow. Down next. There it is, right there. The high. Where is it? No, it's going down. Next. Okay. High, low, is. And now it's going up right here. 24, 50, 0. What the hell is this? Hormel, 25, 20. No, it just don't look good. Next. Interesting again. And it's a monthly. No, Brown and Foreman. Why is that even on here? All right. Fast turn. All right, here we go. What is this one? ADM. Okay. It's going down. The high right there. Now she's going down. 59. Thank you. Next. Oh, this one's going up. Nice. It's a month. No, thank you. I should use my own Coca-Cola. Look at that one. High, low, where is it? Down, up, sideways, down, going up. 67, 61, not quite 1%. No. It's actually that simple. That's one of the reasons why I like Think or Swim. Because I can just go down one time and find out who is looking like this. That right there looks pretty damn good. Okay. Your 30-day high here, your 30-day bottom here, 3 days to the upside. Well, you can't get lower than the low of the year, and that was Monday. Tuesday was high, Wednesday was high, that's 3 days to the upside. If like Coca-Cola. Well, that's pretty simple. Y'all like Coca-Cola. Well, I think we all do. What do you over here? Questions. What do you think AT&T as a potential candidate? Have you ever traded AT&T? Let's find out. AT&T. AT&T. Here we go. Not this week. The high of the year, right there. Now she's pulling back. Well. It might be good in a couple of days. Even tomorrow. You can find the bottom tomorrow. Okay, 29.80. Now she's dropping. Where's it going to end? We don't know. It's got to end somewhere. Then it's going to bounce off that bottom and go back up again. Well, 27.55 to 27.50, 33. That's more than 1%. If I like AT&T. But as it's dropping, why would I jump into it until it finds the bottom? Like here's the bottom here. Okay, top, came down, stop, went up. Okay, here it is. Now she's coming down. How far down? How low can you go? How low can you go? That type of deal. How low can it go? It's AT&T. They've been around for a very long time. What do we have over here? Rick wants to take a look at UPS. All right, what else do we have here? No, we don't. Rip MB. What is MB? What do you guys saying? Stereo Labs. Nope. All right, what are we looking at? I started trading, and my shares went worthless after my covered call. Could you show how to do a call when you own the stock? Absolutely, Joe. All right. Well, let's look at UPS for a second. Get right back to that question. The high year 145. The bottom of the year 83. Up, down. Now she's going back up again. Well, that's UPS. Look at the last 30 days. Okay. Last 30 days. Here's the high. Here's the bottom. Down, up, down. Now she's going back up. She's at 84.38. The 84s are going for 162. That's over 2%. Then the question you should be asking yourself is, do I like UPS? Do I want to hold on to it? Do I want to keep it? Well, let's do a covered call at 85, just for those new here. See how it works. Then I'm going to do Joey's request. Show him how to sell a call option against a stock you already own. Well, that part's easy. All right. 85 is what we're looking at. 85 is right there. One contract right there. Market order, and here we go. So this is what the order should sound like and should look this little green line here. That's what it looks like. That's what it sounds like. Just read it slowly to make sure you understand everything that's there. By one covered call UPS. Well, that tells your broker what you're doing. I'm buying a covered call on UPS. And the broker understands that you're buying the stock first, and then you're selling the option after. 10 October 2025. That is not this Friday. That's next Friday. The $85 call option, which means I'm selling it whatever the price is now. 84.38. I'm selling it at 85. This is what I'm collecting 40.34, and it's costing me 300. Well, whenever you make an investment, that's what we're doing. We're making investments. It's going to require some type of capital. Well, for 100 shares of UPS, that's $8,300. Now, I'm kind of hoping, okay? I'm kind of hoping when you get your 60s and 70s, you're ready to retire. Well, you should have at least 100,000. You should. After working 50 years. Think about it. 40 years, $100,000. That's not even $8,000 a year. Not even. Anyway, besides the point. So once you get however much money you have, this order right here to buy 100 shares UPS, sell one covered call. So I'm buying it at 84.38. I'm selling it at 85. And I'm collecting this right away. I don't wait for the stock to move. Most people buy the stock and have to wait for it to go up. Now I could if I wanted to. Buy it here at 84.38 and sell the 84s. Well, it's a safer trade. So let's do it both ways, the 84s and the 85s, and see which one is more profitable. So the 85, let's do that one right now. Need the calculator for this one. I'm good, but I'm not that good. All right, so the profit, 134.50, and then we take the profit and we divide it by the investment. Profit, max profit, 134. Do you remember the part where I said I want simple, safe, predictable? When I say predictable, I want to know how much money I'm making before I even make the trade. Because most people buy a stock. Well, if you buy a stock, you now have to wait for it to go up in order to make a profit. Well, the covered call, the stock doesn't have to move at all. So if I buy it there, sell this, I'm getting this the very same day. That's my profit. And then if this right here, 5, then I'm jumping out. Now we're going to do the 84, and then we're going to do the 85. Which one is a better trade? Okay, so me personally, I do the 84s because I want safety. Now some of you might be younger are going to want more profit. Well, it's okay because you're younger. It is what it is. Which means if you look at it this way, you have the opportunity more so than I do to fix any mistakes you make. So if I make a mistake and lose a lot of money, well, I'm retired. Means I have to go back to work to replace that money. You being at work, punching that time clock, punch, punching that time clock every day. If you make a mistake and you lose some money, guess what? You just added to it from your salary or from your paycheck. Well, it's a hell of a lot easier than going out and getting a job, especially when you're over 60. Because I go get a job at 60, they're going to look at me differently than if I was in my 20s or 30s. Not to say that I can't keep up with them. It's just it is what it is. You know, I'm 61, 62. Things just don't work like they used to. And that pisses me off like you wouldn't believe. I mean, it's a horrible sensation. Wake up in the morning. Wait a second. That thing was working yesterday. Why isn't it working today? It's going to happen. I know some people laughing right now. But guess what? When it happens to you, just think I'll be laughing. Anyway. So you take the profit. 130. Why did I run 134? Okay, Claire. 131.50 divided by the investment 83.69. That comes to 1.57. Okay. 1.57 if you like UPS. Also, don't forget, if you buy it at 84.38, you sell it at 85, you also get the difference between the purchase price, 84.38, and 85, which is an additional 62 cents per share. It's always per share. I mean, that adds up pretty quick. Okay. But the stock has to go up in order for that to fulfill. So let's take a look. If we do the 84, all I have to do is change this right here. 85 to 84. It's pretty easy. So change it to 84. Now the numbers are different. Okay. Now I'm making $87 per share. It's costing me $300. Well, that's not as good, but it's a safer trade. You always got to keep that in mind. Safety over profitability. All right. So I got noise coming over here. I have no idea who that is. Yeah, it wasn't that difficult finding that one. All right. We're going to look at the gap in a little bit. All right. Fab, I'm going to look at yours in a second. Sit tight. So this one at 85 is 1.5. All right. Let's do 84. 84 is $87, and it's 83.13. That's 1%. All right. So the 1% is safer. So if I do it by 84.38 and sell it 84. I'm making 1%. Fine. If I do it 84.38 and sell 85, I'm making 1.55%. But the stock has to go up in order to get all my back. But you got to keep in mind, am I okay owning UPS for the long haul? That's just the question. Do I like it enough to buy it onto it for the long term? Now. Who was it over here? Joey wanted to know how do you sell a covered call on a stock that you already own? Well, you already own it, so you don't have to buy the stock, sell the option. You already own the stock. So now all you have to do is sell the option. And that is single. Because you're just selling one option. You're not doing a multiple trade, buying a stock, selling the option. Because once you click onto here, these are all trading strategies. Single, vertical, back ratio, calendar, diagonal, straddle, cover, synthetic, blah, blah, blah. All those. So if you already own the stock, you just want to sell an option against it, single. Okay, you want to do a covered call, buy the stock, sell the option, trades in one. That is the covered call. Okay. When you get down to here, some of these get really complicated. We're not going to go over those, but just to let you know they're there. All right, what do we have? What do we have next? All right. Let's say, okay, we did that question already. What do we have next? AT&T, we did that one already. I saw one of your videos, for example, the stock is $10. You placed the call $9.90 with the premium, but you misused used the 10 from the strike. Oh, you minus the strike price premium. I was sort of confused, and it was hard to explain. Hopefully understand. Okay, perfect. Okay. Fab, you ready? Perfect example right here. All right, Fab, you ready for this? If I'm buying a stock, UPS, the current price is $84.38. Now, if I decide to buy it at $84.38, sell the 84s, which we were just talking about 2 seconds ago, the 84 is going for $1.62. However, if I buy it at $84.38 and I sell it at $84, I'm losing 38 cents per share. That 38 cents per share has got to come from somewhere. So if I subtract the 38 cents per share from the premium I collect, 162, what am I walking away with? I'm walking away with $1.24. Right? $1.20. You take 38 cents and you subtract it from 162. It should be $1.34. I think. Or $1.24. $1.24. But $1.24 is still more than 1%. 84. It's percentages. So it's a safer trade. 84.38. Some fours. Still get 1%. The stock doesn't have to move at all. If it goes up, If it stays exactly great, it can come down. Now still great. Stocks only go three different ways. They go up, they go down, or they stay flat, or sideways. So if I do this trade, buy at 84.38, if the stock goes up, great, I make a profit. If the stock stays the exact same, I still make a profit. If the stock comes down, as long as it stays above 84 by Friday, I'll have all my money back on the Monday, and I walk away with that 1%. That's ideal for me. That's what I'm looking for. Revolving. Think of a revolving door. You go in, drop off your money, and you come back out again. Anyway. Next question. Fab, I hope that answers that question. Hey, James, can you look at the gap? Lisa G, of course, we can look at the gap. Fall into the gap. I remember that commercial from the 80s. The gap. Where everybody gets cool clothes. That's where we see when I grew up in the 70s and 80s. Okay. We lived in rural America. Rural. Okay, you understand what rural means? That means it was 3 miles to the corner store. Hubbard's Cupboard. That's what it was. Hubbard's tiny store. And it's still available today. Because I remember Jay was in school with me on the soccer team, and his family owned Hubbard's Cupboard. It was a small town. Okay. Anyway. So it's a 3 mile ride from home to the corner store. And then it was a 15-mile ride to the closest mall. That was the Hanover Mall. And that was an event, especially with kids. Because you throw six kids in a car and drive on a mall. And it was a once a month treat. And we would go once a year. This is what poor people did. We go shopping for our school clothes once a year. A week or two before school started. And we always wanted to go to the Gap. Well, that was the store back in the 70s and 80s. Let's go to the Gap. The cool clothes. I remember Levi's corduroys. Those were the big things back in those days. Anyway, I'm getting sidetracked. Sorry about that. Squirrel. Yes, I do. I have ADD. I have no problem admitting it. I have trouble concentrating, trading single-mindedly. Amazing how I got this far in life. I can't concentrate on anything for a long period of time. Anyway, so that's the gap. Here's the high. The low. Where is it? Up, down. What's going on? Here's turning around. Look, here's the top. Here's the bottom. Now she's turning back up again. Great. Do you like the gap? That's an honest question. Do you like it? Is it consistently profitable? Do you want it in your roster, on your list? Is this the stock you want on your list? Either yes or no. The price is $21.65. I'm going to do the 21.50s, and they're going for 60 cents. That's more than 2.5%. Well, the numbers look good. The chart looks okay. But you still didn't answer the question. Do I like this company? Do I want to own it, hold on to it, never sell it until it hits my target? What's my target? 21.50. What's it at right now? 21.65. It kind of makes it easier when your target is below your purchase price. It's not like I'm buying it at 21.65. I want to sell it at 23. No. I want to sell it at 21.50. That's 15 cents below what I just paid for it. But if I'm collecting 60 cents per share, I take that 15 cents off of that 60, and I'm walking away 5 cents per share. Let's still more than 2%. Okay, let's look at it. Let's look at the numbers, see what it looks like. A year ago, 21.47. Hold on a second. If it's a 21.47 a year ago, and now it's at 21.65. What the hell did we do for the whole year? It went up, it went down. Now we're back to where we started again. What's the point? Anyway, shoots up, pulls back. There's the bottom right there. April 1688. Ooh, we topped out at 29.99 towards the end of May. And then we had a big gap down from 28. All the way to 22. 28 to 22. That's a $6 drop. A $6 drop on a $28 stock is what? 22%, something like that. That's a big drop. So what did it do? It dropped, went up, down, up again. Pretty simple looking at that way. Well, I want just the last 30 days. Because the last 30 days gives me a good idea of where I think it might go next. Because stocks are repetitive. They do the same thing over and over again. They go up until they're done. They go down until they're done. And then they go back up again. And then it's going to go down. And then it's going to go up. And then it's going to it's boggling how it does three things. That's it. Down, up, down. That's it. So if this is the bottom yesterday, okay, today is the upside. It's 2 days to the upside. Today. So tomorrow or Friday might be a good indication to jump into the gap. Well, especially if it's going to give what it looks like. So let's do it at 21.50. See what that says. For those of you that like the gap, this current 21.50, right there. Okay, just one contract because we don't want to write too many. Got a good idea what one should look. Okay, here it is. Buy one. Covered call, gap. 100. That's the weeklies. 10 October. That's next Friday. That means this option is going to expire. Win, lose, draw, whatever. Next Friday. The 21.50. That's the price I'm selling it for. I'm buying it at 21.65. I'm selling it at 21.50. I'm walking away with $48. Now you're probably thinking $48. That's it. Hold on. So quick to judge. Plug in the numbers. See what it says. Because $48 on a $2,000 investment, that's got to be over 2%. And if I can get 2% every single week, that's over 100% by the end of the year. It is. It's 2.28. Okay, 2.28%. It doesn't sound like a lot. $48 off of a $2,000 investment. Now think of it this way. Don't think of it as you're buying stock. Think of it as if you're buying a weekly cash producing asset. An asset that has the capability of giving you some money every single week. Now, there's no guarantee to what that's going to be because these numbers change all the time. Let's get rid of this. I'll show you what I'm talking about. Here we go. These numbers. Okay. The bid, the ask, the open, the high, the low. That's just the stock price. And then down here is all the call options, and these are the put options. Okay. Here's your bid. Here's your ask. Here's the strike prices. In every 5 or 10 seconds, change. Because people like you and me come in, we buy, we sell, and that creates turmoil in the market. The turmoil looks like this. Up, down. That's what the turmoil looks like. We sell. Okay. And as we're buying and selling, these numbers changing. But you know what doesn't change? Drop my pen. You know what doesn't change? The math doesn't change. What did I buy it for? What strike price am I selling? What am I collecting? And then you divide the profit by the investment, and that depending on which one of these you do. 3 October is this Friday. 10 October is next Friday. 17 October, 2 Fridays away. 24 October, 3 Fridays away. 31 October, 4 Fridays. Then we get into November. Holy shit! November's next month. The year. Oh, we're quarter 4. Holy cow. Anyway. So the numbers may change every day. But the math problem doesn't. What am I buying it for? What am I selling? What am I walking away with? What's my profit? Is that more or less than my goal? Now my goal is 1%. That's my goal. Okay, you know what my goal is. You have to figure out what's okay for you. Now think of it this way. If you're okay with it, a half a percent a week is still 26% per year. Well, that's not that bad. So if let's look at Coca-Cola. Because Coca-Cola never gives. I should say hardly ever gives 1%. See, look at Coca-Cola. Here's the high, here's the bottom. That's definitely the bottom. Now she's going up. It's Coca-Cola. It's been in business for over 140 years. There's a high probability that they're going to be making Coca-Cola long after you're gone and long after I'm gone. Okay? But what are they offering? 66, 78. The closest price is going to be the 67. The 67 is going for 61 cents. Now, 61 cents, $61 is probably around 8.5, maybe 9. Okay, not 1%, but 0.8. Let's find out. Okay. The 67 is going for 61. And we're going to divide that by 67. 0.9. 0.991%. Well, that's not bad. Multiply that out by 52 because there's 2 weeks in the year. Multiply that out by 2 because 2 weeks in the year. That's still 47.3% for the year. Doing Coca-Cola. Coca-Cola's a dividend cane. 5 decades of consistent profits. They're always making money. Coca-Cola is the number one soft drink in the United States. In the world. The number one soft drink in the world is Coca-Cola. They just sell so much of it. Anyway. That's if you're okay with it. You always have to think. This is my money. Is this okay for me? That's it. If you're okay with less than 1%, there's nothing wrong with that. You just have to be okay with whatever number that number is. All right. All right. So we already did that one, Joe. Michael Anthony AI markets are the new tech boom. This guy probably missed out. Google. Glad I didn't take your advice on NVIDIA. Michael, I'm going to agree with you 100%. But Michael, you're looking at it from your point of view. And your point of view is great for you. Okay. NVIDIA and Google are not dividend stocks. They're not companies that you invest in to get cash flow from. Okay, I'm looking for cash flow. I honestly don't care about buying a stock and watching and waiting year after year for it to grow. Sorry, but my bills come due every single month, which means I need cash flow. I don't need a promise or a hypothetical. Hey, if I buy it today, maybe in 10 years it'll be worth a lot more. Sorry, I'm not in the same position that you're in. Okay, when you get retired, you're no longer bringing in a paycheck every single week. Your money has to come from somewhere. Right, and if you want to do risky trades, you're retired. More power to you, brother. I have no desire to be forced to go back to work if I'm wrong. Also, NVIDIA pays a 1 penny. It's like $180 per share, and it pays 1 penny dividend. Hell no, not for me. And Google, yeah, they may have been around for a while, but they only have 2 years of dividends. That's it. So insult me all you want. You and I are on different paths, and there's nothing wrong with that. Okay, you're looking for profit in what you're doing. A little bit more risky than me. I want safety over profitability, and that's where we differ. And there's nothing wrong with that, because there are literally hundreds of people just like me that want safety and predictability. Just like there are thousands of people being in the exact same position you're in. They want excite, high risk, high reward. Well, great. You do that when you're younger. As you get older, it's less appealing. I hope you understand that, Michael. Estera Labs. Go look at it, not him. He will tell you no, up 200% this year. Well, Anthony, or Michael Anthony, it would be great if you told me what Estera Labs ticker symbol was. Okay, just because it's up 200%, I can point out dozens of stocks that are 100, 200, 500%. There's over 10,000 different companies. How do you find those? You can't find a stock like that every single week. It just doesn't work that way. And people like you are always saying, hey, I bought this, it jumped up 200%. Yeah, but you're not showing me all the other trades that may have done along the way we didn't make money. Okay, the accounts that I share accounts publicly. I show you the winners and the losers. It just so happens that 99% of my trades this year, or 98% of my trades this year, are all winners. I only have like 4 losses this year. Well, that's pretty damn good. But then again, I'm going for small profits, not big profits like you're looking for. Small profits perfectly fine for me. And if this is not the place for you, well, it's not the place for you. Because I'm not looking for the same thing you're looking for. Okay, there are plenty other people showing you something that's more in your field, so to speak. She's Micron is the future. Micron's MU. Rick, we've already looked at UPS. Here's Micron. Who said Micron? Creed stanchion. Okay. Creed stanchion. Don't get me wrong. I mean, I have done Micron a few times, but not today. I don't ever buy anything at the high year. That's exactly where Micron is today. So why are we looking at it? What's the play here? See, we're here looking for opportunities. And you're say, hey, look, there's a high there. Okay, what do we do with that information? Is it going to go higher? If so, what is your reasoning for believing that? Just because you think it's going to go higher? 120, 30 days ago. Now it's at 180. Let's see if you can understand this. 120, 180. That's a $60 increase. 60. $60 on $120 as a 50% increase. So a stock jumps up 50%. I don't care who you are. I will take profit at 5%. I sure take 50%. I'm not looking to buy something that already made a big move. Because eventually this thing is going to come back down. It was here, jumped up, pulled back. Now it jumped up again. Well, guess what? It will pull back again eventually. Now I'm not looking to put my money into the high of the year. Okay, I want predictability, consistency, safety, and profitability. That's what I want. I'm 61 years old. I don't have the luxury of being wrong like you do. You're still working. 30, 50. I have no idea how old you are. But if you were retired, you have a total different look at where your money is, where you put your money. Okay, so people that are retired rely on their income to live the lifestyle that they want to live. Well, it's got to be safe. Okay, because it's got to last me the rest of my life. And I'm not going back to work punching a clock 40 hours now. All right, where are we? Let's get some questions here. Dr. Deb's in the house. Serial killer. Neil Diamond Auto. Okay, will he be Mr. Adam Casey? What's going on? Shopchi. Akel Bori. Okay. Kid Shriver. Orient. Gabriel. Hello. Any free to use dividend calendars out there? Yeah, best bet is take a look at Google and go into EX dividend calendar on Google search. Okay, I used the one on Thinkorswim because it's free and I like it, and I could insert my own stocks into it. Diana, on my way. Oh my goodness. Okay. Wow. I missed all these questions. Uh-oh. I gotta get comfortable now. These quite a bit of questions here. Diana mentioned something about pants. Brian, thanks, man. Because of you, I want to sell some calls. What do I think of JEPI? Oh my goodness. Brian. Okay. Rocky, how you doing? Brian, you ready for this? Let's take a look at JEPI and I'll give you my opinion. Okay. JEPI. Now, Brian, I told many times, I like companies that are consistently profitable. That means year after year, higher and higher profits. That's what I'm looking for. Okay. So let's take a look at JEPI. There it is, right there. See, JP Morgan Equity Premium Income. JEPI. All right, it's at 56.85. Now, here's the issue I have with JEPI. It's only 5 years old. Okay, Brian, you see that? The very first dividend JEPI paid out was July 2020. July 2020, 5 years old. Now, I will invest in a company that's 5 years old. I want a company that's at least 15, 20, 25 years old. Because companies don't get their peak, their momentum somewhere on 10 or 15 years. 5 years is most companies don't make it 3 to 5 years. So here we go. 2020. The very first dividend was 49. So it goes from 49 to 29. Okay, that is a 20 cent drop. A 20 cent drop, 50 cent piece would be 45% drop from here to here. So 49 to 29, that's backwards. 45, that's up. 43, that's backwards. 51, that's up. That's 50, that's backwards. 54, that's up. 26, that's backwards. 32. 32, 37, 31, backwards, 39, 25, backwards, 33, 34, 36, 38, 45, backwards again. 46, 51, 52, 49, backwards, backwards again. This thing went down almost the exact same amount of times as it went up. It's a 50-50 shot. Okay. From 38 to 45. That's going up. 45 to 38. That's going back down again. Then it goes to 46. That's up. 58. That's up. 46. That's down. Goes up. It goes down. See, I only like consistency, profitability. Consistently profitable. Every quarter, every year, every decade, over and over, higher and higher profit. It should look something like this. Now this is Microsoft. Microsoft goes back all the way until 1989. Oh, sorry, 1996. I only want to go back to 2005. That's 20. I want to go back. That's far enough. All right. Who said that one? JPI said that one. Hey, Brian. Hey, Brian. Watch, Brian. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you see that, Brian? Every single year, higher, dividends. 25 years or more. Microsoft, more than 25 years, higher and higher. Now, I'm not telling you not to do JEPI. You asked my opinion. I don't like it because it's not 20 years old, 5 years old. Number one. And number two, it's not consistently profitable. The profit should be higher and higher after year. JEPI is not. That's why I don't like it. All right. Anyway. Brian, thank you, Brian. Dr. Dev. Go to Micro Center for the computer repair. Geek Squad doesn't know what they are doing. Micro Center. Is there a Micro Center in St. Pete? Hold on. Don't go anywhere, guys. Micro Center. Mo. Yeah. Micro Center is in Miami. Yeah. Sorry. Wait a minute. There's one right there. Where's that one? That's Micron Media. That ain't it. Micro Concepts of Tampa. Oh, all right. That might do it. Uh-oh. There we go. Sorry, had to go check something. All right, Tampa. I'll see what happens. MRK, don't buy. I'm going to agree with you, Paul. Red to buy 100 shares before selling a covered call. Almost impossible to lose, right? Red. What is he talking about? Red. Is that something I should know? RED. Nope. He wasn't talking about red because there is no red. Brian, it'd be nice if you actually let me know specifically what you're talking about there, because kind of doesn't make any sense. Gabriel, I just gave 1,000 hearts. Thank you. Thank you, Mr. Gabriel. Alex, how are you today? What are your thoughts on OPIL? Isn't this like the fourth day in a row you asked me about this thing? OPIL. It's going to be the exact same answer it was yesterday. And the exact same answer was the day before. And the exact same answer the day before that. Because you keep asking the exact same question every day, kind of hoping I'll give you a different answer. Well, it has no options. So no options. See, rule number four. Weekly options only. I have no desire whatsoever to sit in front of my computer and look at this thing all day long. I don't do that for anyone. I mean, I'll do it for my grandson. That's about it. Other than that, no. Thanks, Alex. Dollar Tree. Isn't that DTR? DTR. No, it's not. Damn it. DLT. Is it DLT? DLT. I forget what it is. Does anybody know what dollar is? Right? DLTR. I know DLTR. Okay. No, don't get me wrong. I like Dollar Tree. I do. Okay. Here's your bottom, here's your top, you dropping from bottom. That's it. Just keep your eye. I'm going to write Dollar Tree down for next week. Only because it's going to find its bottom pretty damn soon. See that drop? Look at that drop. I mean, come on. How low can it go from 118? Now we're down to 90. That's $28 drop. Well, it's gonna stop eventually. And I want to be there when it does. So I'm gonna write Dollar Tree down for next week. Uh-oh. Don't know where my pen went. DLTR. Awesome. All right. Who came up with that one? All right. Fresh boy. JEPQ. Oh my God. JEPQ. Okay, so fresh boy. Let me ask you a question. If JEPI is a flat out no, it's only 5 years old. What makes you think JEPQ is any better? Okay, Brian, we just analyzed JEPI like 5 minutes ago. Okay. JEPQ. It's going to be the exact same JEPI. I pretty much guarantee it. Okay. Very first dividend paid in 2022. This thing's only 3 years old. JEPI is at least 5 years old. JEPQ is 3 years old. Look at the numbers. 37. 34, backwards, 40, 54, 38, backwards, that's twice, 68, 54, backwards 3 times, 57, 44, backwards 4 times, 43, backwards 5 times, 45, 40. I'm not even this anymore. It's the exact same as JEPQ, all that crap from Morgan Stanley. It's going to look the exact same. If you don't mind the dividends going up, down, hey, fine, do it. Okay, that's you. That's a you thing. Okay, you ask my opinion. I like companies that have 10 to 20 years of increased profits. This thing only has 3, and it's not increasing. It's going up and down. It's like a freaking yo-yo. So no to JEPQ. Mr. Nice Guy. Oracle. ORCL. Interesting. Wow. Okay. This gives me a little bit of uncomfortableness. All right, let me explain for a bit. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Okay, down. Big jump up. Now it's coming down. Look at the gap right here. Gaps have a tendency to fill. You got your top here. She goes from 240 to 340. That's a $100 jump. $100. Yeah, it's going to come back down. Not all at once, but it will eventually come back down here. So I'm not going to do Oracle for a while. Sorry. Lemonade. Cost average down gets you out of stock. Sometimes it does. There's always a good strategy sooner or later. Okay, we already did that one. Brian, I'm thinking JEPI will give me a 12% return with $6,000 after 1 year. $6,000 to buy 100 shares to sell. You can do a calendar spread. Okay, you don't need to buy 100 shares. You can buy one calendar spread further out, like December. Okay. Let's get rid of this. Down. Where we at now? 89. Let's go. 6. Okay. So if we do the 90s, okay, 290. All right. You can buy 290 right here. That's $2,900. One contract, $2,900. And then you can sell this against $8. So the rate of return there is almost 20% for 1 week. But this is going to slowly decrease. So as you get your percentage, you want to make sure this doesn't go into the 90-day area, which it kind of is. Okay, so you want to go further out, which would probably be the 20th of February. But it's called a calendar spread. Take a look at that rather than waiting a whole year to do something. Or you could do dividend capture. Where you just capture the dividend. You buy the stock for however many you have. Let's say you only have a couple $1,000. Let's say you put $1,000 here, $1,000 there. And as soon as the stock goes up a little bit, the equivalent of the dividend. Capture the dividend, get out to the next one. Because the amount of companies paying a dividend on a consistent basis. Okay, look at them. Okay, these are all the companies paying out a dividend. So why not just capture the dividend? Dividend capture is an easy strategy. Go grab the dividend, 1 or 2%. On to the next one. Anyway, next. Next. Sear gas bar. Penny stocks is the vast. Okay. I'll let you think of that. Yeah. What's going on? Levi. How's it going? Aussie. 996 going on there, Mr. Aussie. Life Wonder. Yep. I love Windows 95 too. Diana. On my way. Yeah, well, you are wearing those pants. What's wrong with my pants? Tie-dye, bell coming back in his fashion. What do you got over here? Oh, PC&G. AEF. What the hell is that? AEF. Oh, S is in Sam, September, Sally, seashells. That? Okay, AES. All right. Give me 1 second. AES Corporation. Why are we looking at this? Do you see that big gap up today? Do you see this big gap up today? Do you think it's going to do that again? Yeah. Gap like that. Yeah. See what gap like this. Unless it's something. Unless it's something like a signed, sealed, delivered contract giving them whatever they're getting from an entity that is going to continue doing business with them, and then this is the beginning of a trading range. No, that would make sense. But if we're trading here between 12.50 and 13.50, and then all of a sudden, for whatever reason, she jumps up like this, why did the market maker do that? Because the market. Yeah. So find out why the market maker did that. Because the market maker, they've got the opening price. That means the market maker got some information either this morning before the market opened, or he got it yesterday after the market closed. He said, you know what? We're going to go from 13, 16 up to $15 overnight. Well, a lot of people are happy about that. But at this moment in time, gaps have a tendency to fill depending on what the reason was here. That's going to take a little bit more research if that's what you want to do. James wants to take a look at PCG. Now, we took a look at this one yesterday. Okay, we bought a covered yesterday or the day before. Can we look at it? Absolutely. Okay, well, we get the high here, the low here. Look at the motion. It looks almost perfect. Almost. Okay. Now we jumped in on I think it was Monday, a couple of days ago, because it all looked good. Look at the last 30 days, right there. Okay, here's the last 30 days. 15, 20, jumps up to 16, drops to 14. And this is where we jumped right here. At 15, so we were jumped in, 15, sold the 15s. Okay, now it's at 15.66. Okay. So the question would be, all right, what do you do come Friday? Do you take a look at it and try to roll it into next? Maybe the market will give you another 1 or 2%. Don't know. Or considering it jumped past price, do we just let it go? That's the question you got to figure out on Friday. Okay, what did you buy it for? What did you sell against it? Where's it at now? Where is it going? Because it looks like it's going up. And we got 2 days left, Thursday and Friday. So more than likely this thing should hit 15.80 or 16 by Friday. Or it might hit 15.80 tomorrow. And then on Friday it starts coming back down again. Because from 14.40 to 15.80, it's a buck and a half, $14. That's 10%. That little itch back there. How do you get way back there? You need one of those long rods. Or do like I forget what that beer is. I forget the name. Something beer. The beer necessity. The beer. And he goes up to the what do you call it? One of those palm trees. Anyway, getting sidetracked. Squirrel. Okay, so hope that works for you. All right, that works. Over here. All right, Miss Diana, I'm glad you like the pants, Diana. Okay. They were a big thing back in the 70s. I went to a class reunion, 1975, graduating class. Yeah, we wore bell bottoms and tie-dye. Paul, let's take a look at new core. By the way, YouTube is echoing. Damn it. YouTube is echoing. Why is YouTube echo? Oh, it's way up there. Drop the volume down. Drop the volume down. Does that sound better? Thoughts on Micron. Now, we already did Micron a little while ago, and we did, Rick, we already did UPS. Flip your camera, dude. Hey, Malibu smiles. You know, you're like number 73. 73. That Malibu. You're number 73. The 73rd person who complained that the fact that YouTube doesn't allow reversals of cameras. If YouTube allowed me to reverse the camera, don't you think I would have done it by now? Can't see the chart fully. Okay, Mick. Is it Mike Osney? Mike Osney. The screen you're looking at here, right? That screen is live on YouTube. Now, see, you're live on YouTube. I got 3 YouTube channels, brother. 3. You're on the YouTube channel on the phone, which means you only see me standing in front of the screen. You need to go to the YouTube channel that's just the screen, because just the screen will, be much bigger. It makes it easy to see the numbers. Yes, CEO is buying. I can't see the chart fully. I got that. Michael Anthony. He's working for a hedge. I'm buying 5 shares of Firefly Space just to hold for long. This is a grift. Time, try, hedge guys. Remember GameStop. See you Netflix and buy back in 3 weeks. Okay, Mike, I'm not quite sure what you're talking about, but hey, okay. What else do we have? Luminaire Kingdom. Can you explain ULTY 120% dividend? Absolutely. They're taking the money from the new investors to pay the old investors. They call that a Ponzi scheme. There's no way in God's green earth can any company pay 120%, 121% dividends. Can't do it. Okay, you can't pay out more than you make. Because that's going backwards. They're doing it to attract more investors. Take a look at the numbers. Where was the stock 2 or 3 years ago? Where is it now? What was the dividend 2 or 3 years ago? Where is it now? What is the flow looking like? Okay, let's pull it up and I'll show you. It's not glamorous as you might think. Which one is it? Which one is it? ULTY. Yield max. Okay. Yield max. Ultra option income strategy ETF. ULTY. It's at $5.50. Let's take a look at the dividends. Number one. The dividend is not even 2 years old. Not even 2 years. See the numbers? 106. 141. That's a nice 106 to 141. That's great. 141 to 127 backwards. 113. That's going backwards even further. 99 backwards even further. 78 backwards even further. Then it goes to 98, 82, 83, 70, 57, 53. Let's keep on going. What else do we got? All right, 53. 53, 46, 10 cents, 9 cents, 9 cents, 9 cents, 8 cents, 8 cents, 9 cents, 11 cents, 10 cents, 9 cents. How the hell can you tell me that's good? Okay. Now let's go at historical pricing. All right. Do you see the price now? $5.49. Okay. The very first dividend, the stock price was $20. The stock price was $20 2 years ago. Now it's at 5. And the dividend keeps dropping. Why do you think? We got some noise over here. What's going on over here? Oh, that's James making all that noise. There we go, Mr. James. All right. So the stock price keeps dropping, and the dividend, it's just they're just giving more and more money out to attract more and more people, so more and more people will invest in a company that's consistently going down. 2 years ago, February 2024, it's at $20. Okay, February 2025, where the hell is it? Okay, February 2025, we're at $7. That's a 60% drop in stock price. As the stock price keeps dropping, well, the premium or the dividends, they're staying right, 10 cents. Look at it, 10 cents. And you think that, no. The number is unsustainable. The stock price keeps getting lower. Now they keep increasing the dividends to attract people to buy this piece of crap. That's just my humble opinion. I could be wrong. But if it was $20 2 years ago, or a year and a half ago, now it's at $5.45. How can you possibly say that's a good thing? Okay? So the dividend now is 9 cents. The stock is $5. Think of it that way. So 9 cents, I should say, 9.2 cents, 0.92 multiplied by 12. No, wait a minute. No, they're paying, once a month. No, they're paying twice a month, aren't they? Weekly. Yeah, that's why they're paying weekly. Imagine that. That's why. Okay. So they're paying out a dividend every 7 days. Well, good for them. Why is he called a 10-minute trader? Does he use 10-minute charts, or does he just trade 10 minutes a day? English to me. That's a good question. Now, English to me, you may not know this because you're relatively new here. But 15 years ago, in 2008, when my 9-year-old daughter said, "Daddy, what are you doing? Can you teach me?" Well, I had to come up with a trading strategy specifically for a 9-year-old little girl. 9-year-old little girl wanted to learn how to trade the stock market. So, simple, safe, predictable, consistent, no way for her to lose. That's the 5 things I had to deal with. Now, how do you keep the attention of a 9-year-old? You got to make it less than 10 minutes. So this trading strategy was simple. Rule 1, never buy something that's not on the list. Rule 2, never sell at a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. Rule 5, make sure all the numbers work. So you take all that, the 5 criteria with the 5 rules, keeping in mind that your star pupil is 9 years old. Okay, so in, out, what do you do? What did I buy? What did I sell? What's it at? What does it mean? Okay, it should take you 3 to 4 seconds to look at a chart. Charts aren't that difficult. Hold 1 second. All right. So you ready? Take a look. Here's the chart. It should take you 3 to 4 seconds. High, low, where was it? Where is it? Up, down, up, down, up, down, up. Okay, it's in an upward trend right there. All right. Now, that being said, what's the current price? $15.66. I want the 15.50s right there. 44 cents. That's over 3%. Close to 3%. Well, that works and that works. Well, what's next? Well, next, I want to look at here. Yep. That looks good. High, low, where was it? Where is it? Down, up, down, up. That's easy. All right. So I'm going to do it at 1550. Right there. That's what I'm making. So get rid of this. Change it to covered call. Do the 1550s right there. Contract. Right there. This sounds like, here it is. Buy 1 covered call PCG 100. That's the weeklies. 10 October 25. That's next Friday, not this Friday. The $15 50% call option. That's what I'm selling it for. And my profit's $30. It's costing me $1,500. Let me get the calculator real quick. $30. My investment, $15.20, gives me a grand total of 1.9%. For 1 week. Now, For my 9-year-old daughter, she had X amount of dollars to invest. So she said, all right, I can buy 3 stocks this week. This is one. What did it take me? It took me less than 1 minute to take a look at the chart, take a look at the numbers, actually pull up the trade, calculate the rate of return, and if it's a yes, I hit this little button over here, and that sends it to the market maker. Boom, I'm in, I'm out in less than 5 minutes. So I can spend, or my daughter could spend all the money that she had. Now every week I only buy like 2 or 3 companies. That's it. I'll sell 2 or 3 and I'll buy 2 or 3. And it takes less than 10 minutes. What did I buy it for? What did I sell? Where's it at now? Where's it going? What does it mean? What do I do? There's very simple questions. Okay, what did I buy it for? Well, I bought it for, what the hell is that? Out of the way. 1566. Bought it 1566. I'm selling the 1550s. I'm walking away with $30 per contract. $30 per contract is 1 point whatever percent it was. Great, it works. Do I like PCG? It's a yes/no question. Well, number one, it wouldn't be on my list if I didn't like it. Okay, any stock that my daughter looked at. Let's get rid of this. I'm going to write that one down, PCG. All right, this is my list. First week, this is this week right here. These are the companies I'm looking at. Okay, these are the companies for next week. General Dynamics. These are the companies for the next week. These are the companies for the next week. And then I'll pick up on another list. Because the list of stocks that I like are companies that are consistently profitable. Dividend Kings, Dividend Aristocrats, Dividend Champions. It's one company after another. Do I like it? Yes, great. It's on my list. I don't need to check the financials. I don't need to check the profitability because it's already on my list. Once it's on my list, I don't have to look. I don't have to look to say, hey, McKesson is a dividend king. They've increased their profits for more than 5 decades. Year after year after year, they're consistently profitable. So does the chart look right for me to buy it today? Do the numbers look okay? Well, great. That only takes less than 10 minutes to do it. That's where the name the 10-minute trader came from. I definitely have to remember to come to Zoom instead of YouTube. The comments on YouTube are unsophisticated. Judy, you're a member over here. So as a member, you can come here and you can ask questions live. And yeah, you don't get the silliness of the people over on YouTube. Sorry for you people on YouTube. I need to get a moderator over there to get out the trolls and keep the people who sincerely want to learn. Because I feel bad because I'm live streaming on 9 screens. 9. Okay, 3 of them down here I have no control over and I can't see the questions, so I feel bad for them. But here I can answer those questions. I can answer these. I can answer these. I can answer these. These here on YouTube, I feel bad because there's some trolls on there and there's some idiots. There are some people that sincerely want to learn, and I can't spend my time answering stupid questions. Benji, good for you. Block Top, you're up 260% year to date. Awesome. Okay, doesn't help us at any. Okay, and you're probably not as old as I am. Uh-oh. Chess game, SCHD. Weren't you just listening to what I just said? Seriously. This is one of the things I dislike about YouTube. It's like you guys don't listen. Okay, let's go there. Let's go here. Let's go. And SCHD. SCHD. Okay, give it a second. It's going to load. Financial website. You should have access to it. SCHD. Schwab U.S. Dividend Equity. Blah, blah, blah. Okay. Well, being a little challenging, isn't it? gives. There it is. All right, so we're going to look at the dividends on SCHD. I do this all the time, and people keep this all the time, and people keep them. Number one, these companies. SCHD is years old. The very first dividend was in 2011. Okay. So let's do the numbers again. Because apparently people don't listen for some strange reason. 4 cents. 4.6, 6.8, 6.9, 8.6, 6.6. That's backwards. That's a 20% drop. 8.6 to 6.6. 7.5, 7.7, 8.3, 8.2. That's backwards also. 8.2, 8.9, 8.4. That's backwards. 9.1, 9. That's backwards. 10.2, 9.9, backwards, 9.0, backwards, 9.9, 10.5, 8.1, that's backwards, 13.3, 10.8, that's backwards, 11, 11.4, 11.5, 8.7, that's backwards. It's the exact same thing. All these companies ramming this crap down your throats with all the marketing they're doing. The reason why you're buying it is because they're marketing it heavily, saying, hey, this is great. No, it's not. 9 to 10 to 8. It goes from 9 to 10. Well, that's great. That's going up. But it goes from 10 to 8. That's a 20% drop. How can you say a 20% less profitability is a good thing? Okay? So you go up from 9.9 to 10.5. Okay? Then you go from 10.5 to 8.1. That's a 20% drop. It's a 13. Then it goes from 13 to 10. Well, 13 to 10 is 2.5% drop. Anyway, it's no, I don't like that one either. No, you can do it if you want. There's nothing wrong with you doing it. I wouldn't do it with your money because I don't like SCHD. SCHD. It's in an interesting position, though. Look at it. Okay, the top, the bottom, she shoots up, pulls back, now she's going up again. Right there. It's a good play if you like it. I don't like it. It's not 20 years old, not for me. But if you like it, hey, more power to you. Last 30 days. Take a look. 30 days ago, there's the top. Drops, here's the bottom. 1, 2, 3, 4 days to the upside. If you like it. And what's it at now? 27.50. The 27.50 is, I gotta change it to this. 27.50 is paying 15 cents. Well, guess what? That's less than 0.5%. So we got a whole bunch of things going against you. Number one, it's only 15 years old. Number two, it's not offering 1%. Number three, it's not consistently profitable. No. Okay? I just don't like it. Anyway. We got 5 minutes left to go. Let me answer some of these questions. What do we have? Thoughts on Open? OPEN. Hold on a second. Let's take a gander at Open. OPEN. Hell no. Okay, now the reason saying hell no, this thing at 50 cents back in May. 50 cents, and it jumps out to $11. Okay, that's not predictable. That's not consistent. That's not. You can't do that every week. Okay, it does. Not every stock goes from 50 cents to $11 every week. I'm looking for safe, predictable, consistent, and profitable. Yeah, it's profitable, but how often does that happen? It doesn't happen every week. Kilroy, how are you today? Noah, how are you doing? Noah, muted. This brother paused the stream to Google Micro Center near me. Yeah, I did. You mute? Did I really? No, I didn't mute myself. It's still right there. Can hear. Can't. I can't hear you, broski. All right, muted. No sound. Okay. No. All right, we're about done anyway. So sorry. Oh, by the way, YouTube's echoing. Thank you. Paul Newcore, do you think the Honest Company will go back up? Okay, Nina, I'm not 100% who the Honest Company is. Never heard of them. Sorry. So I can't answer that question for you. Index King Coin for Gen Z. Okay, we need to educate people. Yes, we do. Philly Mike, is this pre-recorded? So no, Philly Mike, that's weird. I can hear you. Yeah, he says I can hear you fine. Is it just me? I can't hear anything. It's got to be you, dude. It's muted. No, it's not. So one guy can hear. Wait a minute. You're talking to yourself. Okay, thank you. So Philly Mike, how can I be asking you a question? Is this pre-recorded? That doesn't make any sense because I'm answering your question. Check out DMNIF. What the hell is that? DMNIF. Damon Incorporated. Hell no. Oh, come on, dude. No. Kev Stouts. How you doing? Alex, I'm thinking of selling calls on Coles. When do you think I should pull the trigger? Okay, Alex, you know I can't give you that answer. Okay? I know absolutely nothing about you, other than you come here every once in a while and ask questions. If you're new to the stream, advice boils down to, if you're starting out, you need to cop just a brick at a time and cut it in your kitchen before redistributing. What the hell does that mean? What do you think what do you do if the struck price drops below your cost? Just hold. Oh, if you stock price, okay. That's that fingers getting in the way. Let me see if I can make sense of that. What do you do if the stock price drops below your cost? Just hold? Well, yeah, I hold it and I continue to sell covered calls against it far enough away so that I'm bringing in some money, but not too close where I might be at risk if the stock jumps up a little bit. I got to keep that in mind. Bro, you're muted at 10:58. I'm hearing what you're saying. That's not a sad chart. It's backwards. Okay. Index King for Gen Z. Takira, how are you? Crunk nice jeans, like the style. Hey, they're back in style, they say. Can you do QQQ? Tomorrow night. Okay, I'm done at 11. I just want to answer some of the questions. So, Bryson, come back tomorrow night, 9:30. We'll take a look at the Qs for you. Bro, you muted. Okay, get that. Nobody can hear you. Yeah, I hear that. Good thing Judy sent him a message. All right. That's muted. That's unmuted. So I have no idea what's going on there. All right. I got 1 minute left. I'm just about done. Ceiling NYC with Emma. Oh, cool beans. Oh, alrighty. Brian, if it goes up right into the money, do you just not make any premium if you close out your option? No, Brian. I can take a look at where's it going. All right. Decide where it is, where it's going, and what's next. Charles, I've been asking him about GameStop forever. He said no dividend. They are announcing a warrant dividend, and he's muted. No microphone, buddy. All right, let's do this. Hold on a second. I have no idea how to fix the damn thing. All right, there we go. All right, muted. All right. I was just waiting for the reaction when he realizes. Okay. You guys are saying I'm muted, and some of you guys can hear. Yeah, I hear you. Okay. You guys are saying it's muted, and other people are saying it's not muted. So let's do this. Let's get out of there. Yes. Hi, Miss Judy.
I finally got off the YouTube and got on Zoom. There's a lot of sarcasm in those comments, so I would just disregard all of them. That's all I'll say.
Yeah, I know. I need to find a moderator for YouTube so I don't have to deal with that craziness.
Tonight that I just had to discard my. Oh, get on Zoom. Okay, I'm not going to take up people's valuable time.
All right, you got it.
Have a nice night. I'll listen. Good night.
Thank you, Judy. All right. Want to hear my spicy meatball recipe? This is why I don't pay attention to YouTube. No, I don't want to hear your spicy meatball recipe. Index funds. Sorry, McLean, no. Not to offend, but if you've been making 50% a year for decades, why don't you have tens of millions? Wealth now. I love that question. I get it all the time. Okay? It's an interesting question, and I love it when people tell me how I should spend my money or what I should do with my money. So you're under the impression that, well, I'm just saying that you're wrong, because 50% a year. Let's say I started out with $10,000. 50% a year at $10,000 is only $5,000 a year, $5,000. And if I use that money to pay my bills, I still have to work to pay my bills. So let's say hypothetically my bills are $5,000 a month. Okay? Now, if I make 50% a year, and the 50% a year that I make goes to offset my bills, well, my account's not growing any. Do you see where I'm getting? Okay, so the money that I make on my personal account goes to paying my bills. So the 50% a year pays my bills. You're under the assumption that it grows 50% per year. No, the money I make on a weekly basis goes to pay my bills. Market capitulation overnight as we speak. Thank you, Ozzy. Crypto on. Thank you there, Tim. Oh, we have some interesting information about that. Aussie 401ks lose 30%. Yep, that's another conversation too. But I don't want to. I don't want to get into that one because it has something to do with politics. The 401ks where they're dipping into that, and that's going to screw everybody. Also, the changing. Okay. Behind. See all this crap. That's. Oh my God. I'm going to get into politics. Holy shit. All the crap you're seeing on TV, all the unrest, all this bullshit you're seeing, us fighting with each other. What are they doing behind the backs while we're not paying attention to what they're doing? Okay? Now, from what I heard, all the money you got sitting in your 401k, all the money you got sitting in the bank, all the money you got sitting anyway is going to be changed into digital dollars, whether you want it or not. Okay, you're busy fighting with the Democrats and the Republicans. You're busy fighting against ICE and the deportation of people who shouldn't be here. You're bitching and moaning about Charlie Kirk getting killed. You're bitching and moaning about all this crap, and you have no idea what the elites are doing behind the scenes. They're doing it purposely to keep us distracted. And here I go on politics. I don't want to do this. Let's go back to money. Okay, yeah, Ozzy, you're right. 401ks are going to lose money. Bitcoin will be at all-time high soon. Probably will, Tim. Moses, what do you usually trade with? What options do you like? Moses, that's a good question. I like dividend stocks, specifically those companies that are consistently profitable. Then I like to do covered calls on those stocks. Okay? Hi, how should I set my calendar? How should I set up my calendar? Nico, I know absolutely nothing about you, so I can't really tell you what to do, what not to do. Okay, that's why I have on the website, you can go, whatever channel you're on, okay, there is a link to my website, which does have a calendar, which you can send me your phone number, and me personally, I'm not going to give it to someone else. I personally will give you a call. AI Power Stations plays a hot car full. Some will get Some will go belly up. Sammy, I'm not quite sure what you mean. Kevo, you nailed it. Digital age being slipped on in. Yep. And yeah, I think tomorrow is Thursday. So we're going to have some interesting news tomorrow. And you guys are going to say, no way, he said he wouldn't, but he's doing it anyway. Yep, okay. How should I set up my calendar? We'll take a look at that in a little bit. Can you see, we'll do that next time, cost average down. Yep, how much capital should I have before I start? I always tell everyone, when you're starting, you shouldn't put any money in at all. Paper trade. When you paper trade, successful, it's kind of like playing Monopoly. 4 greenhouses, 1 red hotel, go round and round, you collect all this money, blah, 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 and eventually you win the game. Well, it's the same thing here. Paper trade for a while. When you understand it, when you get it, when you're successful, you will know when to put real money in. You will then know how much of your money you should put in. Because as you get older, you're taking whatever money you make. Then you take a little bit, 5, 10, 20, 100, whatever, out of every single paycheck. And you put it towards your future. It goes somewhere, and wherever it goes, someone is doing something with it. And if that person is not you, you are getting whatever returns that person is getting for you. So if you have an IRA at your company, it's not like a savings account. It's not like a coffee cup where they just throw your money in and they just hold it. No, they take that money and they vest it someplace for you on your behalf. And you get whatever the hell they give you. That's about it. You must be recording a video. No. Just get Intel 60C for January full port. I can't hear you, but I'd love to be able to. Precious flow. Okay. Precision. Are you buying calls? Okay. Is this the only place where he is live? No, I'm live on 9 different channels. Hold on. See if I can do this. Let's see if I can do this. Hold on. Let's do that. Nope, that ain't it. Where did it go? All right, there it is. What's this? Oh, look at that works. Okay, is this right there? Oh, come on. Okay. What else? 9 channels. Twitch. What else? There's a couple more channels. I don't remember what they are, but 9 different channels. I don't know. Can you even read that? I don't know. Okay. So. So I got 3 channels. I got 2 channels. That's about it, as far as I can think. Oh no, it's Uncle Bruce. Everything except for OF. Whatever. Why not just trade meme coins? Oh. Alright. Madik, give me a buzz. Can we look at Alcoa, please? I'm done for the night. It's past 11 o'clock. I finally learned how to use this damn thing. Well, part of it anyway.
I think you're getting better with it, James. Just say.
Yeah, I know, but how do I get this thing to go away? The one in the back.
I don't know. That's out of my league.
It's out of my league, too. I have no idea how to do this. Come on. Get rid of... All right, I'm done anyway. There it is. I have no idea how to use it, but I do have someone coming in to teach me how. So that's going to be it for the night. I mean, I definitely need to get a moderator on YouTube. I feel bad for the people there. Are you muted on YouTube? Hey, Bubba, how are you today? I don't think I'm muted on YouTube. I'm on his profile. Where's the live? Where's the live? I just told you where the live is. I got 2 on TikTok, 3 on YouTube, 1 on Zoom, 1 on X, and 1 on Twitch, 1 on LinkedIn, and I forget where the other one is. Where is the other one? I don't know. We'll figure it out. All right. I'm done. You guys have a great night. You guys, I'll see you in the morning.
Thank you.
You're welcome. And there and there and there and here and done. All right. It's Uncle Bruce. Great. Blah 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 blah. You guys have a great night. See you all tomorrow. And I see you all tomorrow also. And see you guys all tomorrow. 5 more questions. You are actually muted on YouTube. I just checked. No, don't. Hold on a second. Audio capture. Looks like it's working. Tra-la-la. I hear you just fine on YouTube. Okay. That's funny. Some people say YouTube is working, some people say it's not. Some people say it's not. It's like, who do you trust? Uh-oh. There's only 1 live on YouTube. Hello. Yep. There's an echo. Okay. Yeah, that's much better. There's only one live on YouTube. Yeah, that's right. I turned the other one off. Oh well. Is what it is. Hello. All right. That's it. Done for the night. You guys have a great night. We'll see you again tomorrow. YouTube has been muted all night. I don't know why. Because it seems to be working fine. Anyway, we're done. So you guys have a great night. We'll see you again tomorrow. Oh, gotta shut this